Hello and welcome to another episode of the Real Estate Investing Club, the place investors go to gain actionable advice, learn about current market trends, and hear war stories from other professional investors out there in the field today. Before we get started, I have two quick housekeeping items to cover. First, if you like the episode, we would very much appreciate a like, subscribe, and share. It is the best way to support the show and keep it running. Second, if you are a new investor looking to get started in real estate or an experienced investor looking to take your investing to the next level, we created an ebook for you that will cover how to find deals that are actually deals, how to finance those deals with little to no money down, and how to exit those deals for maximum value. On top of that, I throw in an insane amount of free bonuses that you'll have access to once you buy the ebook. All we charge is our admin cost to keep the show running. So, if you're serious about real estate investing and want to create both active and passive income as an investor, head on over to the website at therealestateinvestingclub.com and click on the button that says Get the ebook to grab yourself a copy today. So with that said, let's dive right in. Today we have a very special guest with us, ready to drop some investor knowledge on you. So buckle up, grab your pen and paper, and enjoy the ride. All right, we are back with another episode of the Real Estate Investing Club. Today we have with us Matthew Sullivan. Matthew is the founder and full-time CEO of Quantum RE, a serial entrepreneur. He is the founder of crowdventure.com and co-founder of two real estate funds. He spent a number of years working alongside Richard Branson, a hero of mine, and the Virgin corporate finance team out there in London, where he was appointed a director and trustee of Virgin's London Air Ambulance. I'm excited to learn about that. Now Matt lives in Utah, down here in the U.S., is the author of Head First, a roadmap for entrepreneurs, host of the Hooked on Startup podcast, and holds a private helicopter pilot's license. I love it. There's a lot to dive in there, Matt. So thank you for hopping on the show. How are you?
Thank you, Gabe. It's a pleasure to be on. Thank you. I was thinking, that doesn't sound like me. I suppose, yes. Many years ago, all these things, I think, one casts one's mind back. And, those are the good old days.
Yeah, things build up over the years. We always start out with stories here on the Real Estate Investing Club. So why don't you take us back to the beginning? How did you get started in real estate?
Well, real estate is one of those things that I was always intrigued by, but never really got terribly involved with until I came to the US, which was 7 years ago. And I came here really with a clear intention just to focus on real estate, because it's something that had fascinated me. But I, in my entire entrepreneurial career, I'd focused on telecoms and technology and finance. So when I moved over here, I set up a crowdfunding company called CrowdVenture, which was one of the first real estate crowdfunding companies to sort of spring up as a result of the Jobs Act. And that really threw me into the middle of all of the legislation around funds and structures and digital finance. And so it was really sort of no looking back from that point.
Awesome. I love it. So why, 7 years ago, you were over in England, correct?
Yes, that's right. Yeah. So I was, a number of, compelling reasons brought me to the US, one of whom is now my rather long suffering wife.
That's a big reason. But
it was just a fantastic time. It was hugely exciting just to sort of, move over with literally a suitcase thinking, well, let's just see how good you are. So can you drop everything, move over to another country? And I can tell you, it hasn't been without its challenges, but it's been an incredibly exciting, and it still is, an incredibly exciting place to be for a whole number of different reasons.
Yeah, I don't want to turn this into a culture podcast, but it's always interesting to hear people's, their perspectives from, living in a different country and then moving here to the U.S. or vice versa. But I'm sure you have good ideas on that, but we got to stick on real estate because that's what we're here to talk about. So, what got you interested in specifically the U.S. real estate? Why U.S.?
Well, again, because there's so much of it, and for those of you that have been brought up with real estate in the US, you don't see it as well as someone who comes from somewhere else. So, real estate in the UK is nothing like as large or diverse as real estate in the US in terms of an industry. There are so many different sections of real estate from, if you think about just the way that deals with finance in terms of private capital, small funds, institutions, hedge funds, huge family offices, the different types of deals, fixing, flips, wholesale properties, so it's just such a large, it's an enormous diverse industry. And one of the sectors that I came across about 3 or 4 years ago, which really led to me founding Quantum RE, was this concept of being able to invest in the equity in single family homes where the owners still lived there. So that's what really gave birth to the company that I run now.
Interesting. Yeah. No, we talked a little bit before the show, very briefly. I cut you off because I want to learn on the show. But you mentioned that, what Quantum RE does is it helps people access their equity without having to take out, a general BRRRR strategy. You go back, you refinance, you get a new loan, or you take a HELOC on your house. So how is that, what you're doing, different than the standard, what they teach in the standard BRRRR strategy?
Well, the biggest problem that you have as a homeowner, if you have equity, is that you have to go back and borrow money to be able to access that equity. And now, if you're a homeowner, you could be an investor. You could be someone who is a keen real estate developer, or but if you have equity in any of your properties, the only way that you can access that equity is to borrow against it. Now, if we talk about homeowners generally, I'm not talking about people that own large residential portfolios, but there's over $18 trillion worth of equity locked up in single family homes in the US. Wow. Over 15 million homeowners have 50% or more equity in their homes. Now, if you look, I know it's huge. Now, if you look at a traditional or a standard sort of commercial real estate transaction, if you look at the capital stack there, you have all sorts of flavors of debt. You had, senior debt, junior debt, mezzanine finance. You have mortgages that participate in some of the equity upside. You have preferred equity. You have equity. You have a number of different sort of variations of that. In a residential home, if you're a homeowner, you've still got $1 million asset, but the only thing you can do is borrow money because there is no equity funding available. So what we do is we have a number of investors that want to participate in the potential increase in value of the home rather than being paid by getting interest from a loan. So what we have is an agreement, which we call a home equity agreement, which is structured very similar to an option agreement. So there's no change of title. We don't go on title as a co-owner. It's not joint tenancy. Mm-hmm. It's an option agreement that sits alongside the owner. And when the owner sells the property, which can be up to 30 years, the owner pays back the original investment amount together with a share of the increase in value of the home. So that means the investor gets to participate in the increase in value in homes that are not for sale. They don't have to worry about rent collection or fixing the roof because the homeowner does that. The homeowner pays the mortgage. The homeowner pays the property taxes, cuts the grass, fixes the roof. The investor is a silent partner. And then when the property is sold, they get a magnified return. So they get slightly more of the equity increase than the homeowner does because they're in a preferred equity position. So it's a really interesting asset class because it solves a real problem for homeowners who have equity but don't want to touch it because they just don't want to go into debt. So this is a great way for some of your, people that you work with, if they've got equity, whether it's in an owner-occupied home or an investment property, they could unlock up to $500,000 per property without any monthly payments with no interest. It's not debt. So it's not included in your debt to income calculations. And it's free and clear cash that you can use for, pretty much anything you like.
Interesting. Okay, so let's break this down into a real example.
That was a long speech. I'm sorry about that.
No,
yes. Thank you for still being here. Yes.
I like thinking about it in terms of an actual house. So let's use the example. I'm closing on a house that I'm selling this week. So it's a duplex in Seattle. I bought it for $310,000. I'm selling it for $520,000.
Well done.
And so I have some equity there. So you using your example, let's say that I want somebody, instead of selling it, I want somebody I want to access that equity without having to sell it or take on another loan, and pay that interest. So what would I do? I would go to your company, and then somebody would say, I'll give you, there's about $240,000 of equity here. So I'll give you $100,000, and then they get, is it a lien that's put on the house, or how is that structured?
Yes. So it's an agreement that is protected by a lien on the property title. So it's similar to a trustee, but obviously it's not a trustee because it's not a loan. Now, there are limits. There's limits to the amount that we will invest. So that's between 20 and 25% of the current value of the home. And if you add the amount that we invest to your existing mortgage, that mustn't be more than 70 or 75%, depending on who the investors are. So there's a couple of sort of goalposts there. So in your scenario, 75% of, let's say it's a $500,000 home, 75% of that is what, 325,000, I think, off the top of my head.
Something like that. I should know
so
that.
We're just going to use the calculator function, 500,000 times
375. You're right.
75. So 375. So if we go up to 75%, that means the combined lien to value must be no more than 375,000. So you've got a $310,000 mortgage. So that means the potential amount that we could invest could be up to $65,000, because we're going to take that 375 cap, deduct your existing mortgage, that leaves an investable amount of 65,000. Gotcha. Next question is 65,000 more or less than 20% of the value of your home? And it's less. So that means that we could go up to $65,000. Now,
gotcha. So
$65,000. If let's do round numbers. Let's say you only want 50.
Okay.
So $50,000 is 10% of the current value of your home.
Yep.
So that means you get a cash lump sum of $50,000 less fees, and the fees are 3%, which is the once-off administration fee, plus any direct costs. So you would pay for things like the appraisal and any title fees. That comes out of the amount that you get, so you don't have to pay for it up front. So you'll net, around 95% typically of that 50,000. Now that cash is tax deferred.
Yep.
So that means there's no immediate capital gains or income tax payable. You have to settle up with the IRS when you sell the home. And when you sell the home, which could be in 6 months' time or it could be in 30 years' time, what we do is we look at how much the house has appreciated from the time we did the deal to the time you sold the house. And then we take a share of that appreciation. And that appreciation, now remember, we invested 10% of the value of your home. So we're going to take a little bit more than that because of the risk. We're going to take 30% approximately of the increase in value. Yeah. Now, we're not going to take 30% of the value. It's just 30% of that increase. Now, if we invested more than 10%, then we would take more than 30% of the increase. So there's a bit of a sliding scale there.
Gotcha. Okay. So let's say, using that example, let's say the house, let's say I sold it for 500,000, just round numbers. And then it appraised in, a couple more years, 5 years, it appraises for, let's say, 600,000. So now there's an additional $100,000 of appreciation that's there. So you would take 30,000 of that 100,000 plus the amount that you put in.
Exactly. So we would get our 50,000 back, plus we would share in 30,000 of that 100,000 increase, and you would get the other 70,000. So the return on our investment is that $30,000. But remember, in the meantime, there's been no monthly payments. And if the value of your home goes down, there is the risk on our side that we may not make anything. In fact, we could even suffer a loss. Yep. So it does work both ways. And that's, particularly for the current economic environment, which is slightly less predictable than it was this time last year. There is that sort of, risk side to both sides. So it is much more of a partnership than it would be if we were simply lending you money.
That makes sense. All right. Well, cool. That's the first time I've ever heard of that type of model. So you guys are trailblazers there. I love it.
Well, it is really interesting because what we're seeing is more and more people finding it more and more difficult to borrow money, because if you go to a bank, the requirements for home equity lines of credit and mortgages and secured loans are far more stringent than they were a few months ago. And we all know why. And also people's financial position has changed pretty much in most cases for the worse, because there's so much more pressure on people from an economic perspective. It's harder to earn money. It's harder to get a job. And because of that, if you have equity, you might find it very difficult to borrow money today when at the beginning of the year, it would have been easier. So it's a real godsend for people that have that sort of equity position, but literally cannot borrow money, as well as people that are keen to diversify out of equity. Because if you've got a ton of equity, you think, well, what's it doing sitting in my house? It's not doing much. I could earn 15, 20% if I was to use it on a real estate deal. So it's a great way of unlocking large lumps of equity for investors who don't want to have a monthly payment associated with that, so that they can use that capital for diversification purposes.
Yeah, absolutely. No, I can see a lot of utility in that kind of model, especially for coastal cities where we've seen this ridiculous appreciation. I mean,
yeah, it doesn't. There's no sign of abating as well.
Yeah, it does not make sense in my opinion. But I'm here, so I'm taking it. I'll take what I can get. Awesome. So, hey, we speed through this podcast. I'm going to move us along a little bit here. I love the model. It's very interesting. Where can people go to actually learn more about that?
Well, everything's on our website. So it's Quantum RE, which is QUANTMRE.com. So we have a calculator there. If you want to put in your address, it'll pop up with what a likely valuation is and give you a rough idea about how much we could access for you. There's a ton of information, podcasts, blogs, articles. There's a downloadable free guide, which you can, understand how this works. Our phone numbers are there, email addresses. So we're there. The moment you pick up the phone and call us, we'd be delighted to answer any questions you have. And if you want to go ahead, we can take you through the process. Normally it takes 4 to 6 weeks for people to close these transactions. So it's pretty quick and painless. And we'd be delighted to hear from you.
Perfect. That is Quantum RE, QUANTUM. Wait, QUANT. I'm going to screw that one. QUANTMRE.
They both work, actually. We figured out that, although we felt pretty smart about the name 3 years ago, we sort of circled and registered everything that sounds like it, because it's a little bit esoteric, but there it is.
That dang the URLs, man, they get you. I had a URL that was kind of similar to mine, and I'm glad I bought it because people keep going to that one. They just keep banging it. So that's quantumre.com. If you guys want to check it out, go say hi to Matt. Click on the little more in the description there. It'll pop down the full description, and in there you can find the URL. You can get involved in this kind of accessing your equity if you don't want to take out another loan on it. So awesome, Matt. Thank you for sharing that. We are into the quick question round, where I ask quick questions. You give me quick answers. It always starts with books because I'm a big bookie. So why don't you tell me your 2 favorite books? One for real estate and one for general life wisdom. Before we continue on with today's guest, I want to tell you guys about a community I'm launching on School to help investors like yourself grow your own portfolio. In this community, you'll get access to all the docs I use, all the systems I've built, everything I've used to grow my own portfolio, as well as instructions and guidance on how to get out there and find great deals, how to finance those deals, and then how to manage them for great returns. Since we're just launching it, the price will be set at a measly $20 per month, and whatever price you join at is the price you'll have for life. We will be increasing the price as the group grows, so if you're at all interested in growing your portfolio along other investors, now is the time to join. I will put the link somewhere in the bio or on our podcast website at therealestateinvestingclub.com, so if you are interested, head on over there. With that said, let's get back to the podcast.
Well, I think there's a book by Tom Bragelman, which is Braegelman, which is called Bank-Free Finance. And Tom's my partner, and I've been working. Well, I know the enormous amount of information that is contained in his book. So it's a great book which explains how to invest in a collaborative way with funders, with property developers, rather than being on the other side, constantly throwing stuff over the fence. It's a much more collaborative approach. He's been incredibly successful over the last, he's been in real estate for decades. So the best real estate book is the book by Tom Bragelman. And the best life book, which I've come across, is a book by Chris Voss called Never Split the Difference. I met Chris at a networking meeting a few years ago in Los Angeles. And he just launched the book, and he's an ex-FBI negotiator. So he would talk people off tall buildings and all sorts of other things. So the insight into the human psyche is, pretty much without second. It's a fascinating book just to sort of understand how tiny changes in language can have a fundamental effect on how you are received by the other person. So it's a really interesting book.
Awesome. Yeah, I've heard of that one before. Never Split the Difference. I haven't read it, but many people have said it's pretty good. It's pretty good for, as you said, the psychology.
But he's an interesting guy as well. So check out all his YouTube stuff. He does a lot of talks to Google, and it's all recorded. And there's some real nuggets there. I'm sort of smiling because just some simple stuff, and it just has such a fundamental effect.
It's the simple things that usually get you. It's the what's that one book by Dale Carnegie? How to Win Friends and Influence.
How to Win Friends and yeah.
So what he says in there is so simple, but I like when I read it.
And it stood the test of time. That book's decades old.
Exactly. Moving on to the next question. This is related to your younger self. So you have some years under your belt. You could go back to the Matt who was just getting started maybe 7 years ago, or if you want to go back further in real estate, go up to him, shake his hand, look him in the eye, give him one piece of advice moving forward.
Well, I think I would go back a lot further, actually, because I think there's some sort of fundamental things, which is, it's really exciting doing all sorts of different things. But my advice to my younger self would really be find something that you really like doing and then just stick to it. Just become an expert, just know it inside out and go through all the twists and turns, but become such an expert that, and that will carry you through the rest of your life. But find something that's big, find something that's scalable, that's not a sunset industry. So don't choose something that you're going to become incredibly disgruntled with because you've run out of things to do. But find a growth industry, but just throw yourself in and become an expert and just get better, rather than exploring all these different things, which are incredible fun, but you get left behind by people that become experts.
Yep, absolutely. It's so easy to go from one thing to the other, but the snowball effect where you just kind of stick to
absolutely. That's where the winners are.
Yep. Next question is about location in real estate. So there's so many different places to invest. I always like to hear from guests, what is the area that you're most excited about right now?
Well, really, we moved from Southern California to Utah for a number of reasons. For personal reasons, in other words, we wanted more space, fewer people. We wanted to be less crowded. You get more bang for your buck in terms of real estate. I've got 4 young children, but also Salt Lake City and Utah generally although I hate to mention this in a public environment, is, I think, one of the most exciting places for real estate in the US. The reason I don't like mentioning it, because I don't want anyone to come here, because that'll push prices up. But I think that Salt Lake City in particular, and the surrounding areas, is, you can feel the excitement, you can feel the growth. There's a real work ethic, there's a willingness, the infrastructure is here, and it's a very exciting place to be. I wish I'd discovered it a couple of years ago.
Yep, I've been there. I like Salt Lake City myself too. And you guys you're like here in Seattle. You got the mountains near you. You can go snowboarding. You got the nice summers.
But it's the bars. It's the business bars as well. It has everything, So, but again, the caveat is, it's actually terrible here. So don't move here, whatever you do.
You didn't hear it from Matt. It's a bad.
Yeah, exactly. Yeah.
Next question. I never asked guest this, but you worked with Richard Branson. I have always looked up to him. So what was it like working on the team at Virgin?
Well, it was really interesting the way that we met. So here's a very short story. So we had a small corporate finance company in Kensington High Street, just down the road from his offices in London, in Notting Hill. And one of the companies that we invested in as a corporate finance company was a hot air balloon company run by a guy called Per Lindstrand, because my boss, Rory McCarthy, was a keen aviator and jumped out of balloons at ridiculously high altitudes. So he wrote a letter to Richard Branson saying, "Dear Richard, we own Lindstrand balloons. We think we can design a balloon that can fly around the world. We think you should be the pilot." So we had this idea to do what became the Virgin Global Challenger, which is this, it's just back in the sort of late 90s, or mid 90s. And so we became very good friends with him. And so because of that, he invited us to sort of help him out with the corporate finance side of things. So, we became the sort of gatekeepers to a number of corporate finance deals that he was looking at. So because of that, we got involved with Virgin Clothing, Virgin Cosmetics, V2 Music, Virgin Executive Jets, Virgin Helicopters, and loads of Virgin projects that never made the light of day. But we worked very closely with him and his team, who were the scariest and brightest people that you've ever met. Scariest in the sense that they were just sort of, they were always 5 steps ahead of you. So it was a great combination of unending enthusiasm, but it wasn't misplaced enthusiasm. It was a real ability to see things in a way that no one else could see them. In other words, a bit like sort of Elon Musk. Well, let's just build it. And everyone says, well, don't be stupid. Well, why can we not do it? And so it's that ability to see things, and it was infectious and it was great fun. I met him a number of years later, bumped into him at the Clinton Global Initiative, and he did recognize me, I think, or he was just incredibly polite. So I haven't seen him for a number of years, but it was a fascinating time. It was great to be there. I do occasionally sort of sit back and smile, but I wish I knew more then, because I would have, made so much more of it. But that's life, really, isn't it?
Yeah, hindsight's 2020 for sure. Awesome. Well, Matt, hey, that is the end of the podcast. So I appreciate having you on here. Again, if you guys want to reach out and say hi to Matt, go to quantumre.com, QUANTMRE.com. Matt, are you on LinkedIn as well?
Yeah, all the usual suspects, LinkedIn, Facebook, Twitter, Instagram, if you want to see pictures of cats and things.
If you want to check out Matt Cats, go to Instagram. I will put all those links.
Or can I just say, Gabe, I'm more of a dog person. I just want to, there's a bit of a caveat there. I don't want people to get the wrong idea. Cats and dogs, guinea pigs, chickens. There you are, just in case.
So many people, they were very excited.
Yeah, I just, pulled it back, victory from the jaws of defeat.
So I will put all those links in the show notes. Just click a little more in the description, and it'll pop down the full description. You can see those links in there. Again, Matt, thank you for hopping on the show. It was a pleasure talking to you.
Gabe, thank you. It was my pleasure. Thanks for having me on.
Absolutely. For everybody who's here with us today, thank you guys for showing up. You are the reason that we do this, so we appreciate having you here. Again, the best way to support the show is just to subscribe, like, share this episode with your friends and family. Other than that, I hope you guys have an absolutely fantastic week. Keep rocking real estate, and I look forward to seeing you on the next episode. Thank you for joining us for another episode of the Real Estate Investing Club. I hope you guys enjoyed the episode and were able to pull some actionable advice that you can go home with and apply to your own investing business. Before you go, I have a gift for you. If you're a new investor looking to get started or an established investor looking to take your business to the next level, I've created an ebook just for you available on the website. This ebook will cover how I was able to create both active and passive income in real estate with very little money to start with. In it, I will address the three most often cited obstacles new and veteran investors run into by showing you how to find a deal that's actually a deal, how to finance that deal with little to no money down, and how to exit a deal for maximum value. And if you get the ebook today, I'm going to bury you in bonuses, 7 of them to be exact. First, you'll get the off-market lead generation blueprint, which will take you through the exact systems and processes we use to generate off-market leads like clockwork, which is the most important skill when it comes to creating real wealth in real estate. Then you'll get the A to Z REI systems and vendors guide, which will allow you to peek under the hood of our business and see the exact tools and systems and even the vendors we use to grow our business. After that, you will get the top 100 best performing keywords pack, which will give you the exact keywords we use to target leads online and generate leads without having to lift a finger. Next, you'll get the contracts bundle for wholesaling and renting real estate, which will give you access to all of the contracts we use in the field to execute all types of transactions. After that, you'll get the Investor's Quick Analysis Calculator and Offer Tool, which will allow you to quickly calculate whether a deal is an actual deal and will allow you to create an offer automagically from those calculations. Next up, we'll give you the Investor's Daily Success Tracker, which is a tracker you can use to ensure you are taking the right actions day in and day out to reach your financial goals in real estate. And finally, you will get the Wholesaler's Template for Quick Assignment Cash, which will give you the templates we use to present our wholesale deals professionally and efficiently to our buyers. I know that is a ton of things to say. I'm glad you're able to stick with it. So you'll get both the ebook and all of those 7 free bonuses when you download the ebook today. All we charge is the admin cost to run the show. So if you are interested in the ebook and the bonus bundle, head on over to the website at therealestateinvestingclub.com. Click on Get the Ebook Bundle at the top of the page and take advantage of that deal. With that housekeeping item covered, I hope you have an absolutely fantastic day and even better week. Keep rocking real estate, and I look forward to seeing you on the next episode. All right, before I officially sign off, I have a quick announcement to make. If you're interested in becoming a passive investor in one of my deals, my own company, Kaizen Properties, is looking for capital partners for our upcoming projects. We invest in what are known as recession-resistant assets, mainly self-storage facilities, mobile home and RV parks, and industrial properties. If you're interested in investing and would like to learn a little bit more about my company, our investing criteria, and some of the previous projects we've done, go to the Real Estate Investing Club podcast at therealestateinvestingclub.com and scroll all the way down to the bottom of the page. Click on the Invest With Us button. That'll pop up the investor form. Fill that out, and we will reach back out to you as soon as we can. Or if you prefer a little bit more of a personal touch, you can reach out to me at gabe@therealestateinvestingclub.com. So really, that is it. Again, it was a pleasure hanging out with you guys during this episode, and I look forward to seeing you on the next episode.